good Fed futures to look at what's implied for inflation. You know, the Fed looks at the bond market. The bond market figures things out before the data comes out. I do think the inflation is probably falling a lot faster than everyone expects. I mean, you can look at Trueflation, and we're down to sub 2% inflation,
So
excluding housing.
shelter, yeah.
Yeah, and shelter is
It's
finally
underestimated,
cracked.
yeah. Because that CPI number was, I mean, it was just barely cooler than expected, wasn't it?
Yes, but the shelter piece is now at 0.16 month over month. That's at 2% year over year. That level would bring core inflation down sharply. And over 54% of the CPI components are now deflating. It's the highest percentage since COVID started.
It seems, Tom, that the markets have, largely because of what you're describing, moved on from the inflation watch.
Yeah.
They've kind of put that aside as maybe the forefront risk, and much like the Fed has been dragged to doing, wondering about downside risk to growth. I mean, if you just look at things like the reaction of home builder stocks, consumer cyclicals, regional banks, just to that hawkish cut by Powell last week, it seems like it's not hard to get the market a little bit uneasy about, you know, just exactly what kind of a soft patch this is, even if we have confidence that maybe it firms up into next year. So how does that play into the overall action in the index and what you expect from the market?
Yeah, I mean, I think there is something the market's trying to figure out, which is AI is consuming jobs, but that's turning it into profits for corporates. So like profits are expanding. And then we have profit margins have actually been going up in the middle of tariffs. So how are companies able to take 70% of the tariff hit, but margins are going up? So there must be a productivity boom somewhere. And then we have, like you said, $7 trillion of cash on the sidelines, but we have high rates. And so the Fed, I kind of think, is trying to not overheat the economy, but we know that you just point out, like, housing's in big trouble. So I would say it makes sense if inflation's in a good place and jobs aren't really strengthening for cuts to happen, and that would be really dovish. So I think that sort of comes together before the end of the year.